Hey guys, Cameron here with Emerson House Buyers, Emerson Property Management. Every week I bring you tools, tactics, strategies, lessons I've learned, things that have helped me build up a sizable rental portfolio in about 2 years and now manage that portfolio. Today I'm taking a question from Fidel. The question is, can you make a video on how to structure a private money lending transaction through closing? This is going to be very, very particular to your private money lender. My private money lender, the first one I ever used and who I stuck with for quite some time, I had to go through a bunch of financial statements. So he wanted to make sure basically that if everything went south with the deal, could still qualify. And most legitimate, reputable, hard money, private money lenders are going to do that. Nobody's just going to give somebody money and just walk away. If you're doing a big commercial deal, but most small residential deals and the private money side where rates are a little bit cheaper, so 2 and 10, 2 and 12, and that's 2 points and 10% or 2 points and 12%. That seems to be pretty common right now, 2019, 2020. The hard money rates are a little bit more expensive, 3 to 5 points and 12 to 18%. So you'll get a little bit better deal if you can go with the private money side, but they might have you, depending upon who you're dealing with, they might have you have a little bit more, I guess, paperwork together. And I can't say that for sure. It's really dependent upon the private money lender. My private money lender would not mess with anybody until they had done 5 deals. So then, after I had done 5 deals, which I had purchased with my own money, I've used hard money one time, and then successfully done the BRRRR method a few times and used that money to buy other properties. After I had done 5, then I went to the private money lender and we built a relationship. Now, what did it look like for my private money lender with my deals? What I had to do is I had to take the contract. So again, if you guys haven't seen it, up here, the TREC contract, I go through that, just walk you through how to use that. That's when we use the wholesale, as well as the assignment agreement that we use. So when I would actually want to close on these, and I closed on a lot of them, I take the contract, the TREC contract, and I would say, here it is. Here are my numbers. I think it's I'm buying it at 60,000 bucks. It's got about $10,000 in rehab, and it's worth $100,000. So I'm all in at 70. He might, usually he gave me 70, 75% of the value, depending upon how risky the project was. If it was a bigger project, he would knock that down to about 70%, but typically he gave me between 70 and 75%. And he would give me the repairs, maybe not all of them up front, but after I did some, he'd cut me a check. So I took that contract to him, gave him the numbers. He would go do his own due diligence and say, yes, it looks good. I think your numbers are pretty close, your repair number and your ARV number, and I see that you're buying it at X dollars, or in this example, $60,000 in your wholesale or in the TREC contract. After that, it was pretty much engaged everybody at title, and the title or escrow agent would speak with them and get all the private money stuff together for funding. The day of closing, whenever that would be, sometimes you can close early. Most of the contracts say on or before, the 15th, the 30th, whatever the date is. So you don't have to close at the end of the contract. You can close ahead of time. Once we got, I said, hey, okay, can we close, a day early or whatever? Once we agreed on the date of closing, the lender would work with the escrow agent to get the money. If there was some more money for repairs, he would add that in as well. And then I would just get a check at closing. I sometimes had to bring money to closing. Sometimes it was a little, sometimes it was a lot. Like I said, if the repairs, he didn't want to cut them all out immediately at closing, he would kind of hold those back. And then once I was done with the job, like I said, maybe a week out, we had all the floors in, I could go and get the $5,000 from him, or $3,500 or whatever it is. After all of that, especially if you're going to use the BRRRR method, and again, I've got a video up here on how I successfully use some of the BRRRR method to scale and grow, and it's a very powerful strategy. So after we're done with the rehab, I want to refinance and get the money back to him, get him paid back, and lock in a low interest rate for the property. So I would tell the bank, hey, it looks like we're going to be done in about 2 or 3 weeks. I knew it took them 3 to 4 weeks to get everything together. So they would start the process on their end. And then when they had a closing date and they had done the appraisal and the inspection and all their side on the bank side for the long-term financing, because all of my properties at least were long-term buy and hold. I didn't want to do flipping. I've got a video on why I like buy and hold, and I don't wholesale. I don't like to do that stuff. I prefer the buy and hold method. So I'd lock this long-term financing with the bank, and the bank at closing, again, with the same escrow agent. I always use the same escrow agent. You don't have to, but they would collaborate with the private money lender. So at closing, the bank would pay off the old private money lender, and then I would have the cheap financing on the front end or on the back end. So if you're unfamiliar with how the burst strategy works, again, I would look that up or read that up or check out that video I mentioned earlier. But that is how that would work. On the private money side, you really didn't get too involved with them unless you had a huge repair draw. And sometimes they'll give it all to you up front. You know, if it's 5 or 10,000 you want in repairs, typically they'll give it to you up front, especially if you have a relationship with the private money lender. But if you're just getting started, they're not going to cut you a check for 20, 25, 30,000 in repairs up front. They'll want you to see that you've done the work, and then they'll cut you the repairs. So besides the repairs, really it was, if you have to make monthly payments, you would do that and organize that with them. I did not. So it was pretty much then just making sure that they had the title information and knew what days we were closing. They handled everything else. I'd read through the documents to make sure the interest rate was right and the closing date was right. Outside of that, it's pretty straightforward. The escrow, your escrow agent is really going to be the big determining factor on how smoothly that goes. If they have a lot of closings or are busy, that could delay you, or if they're not great at communicating, then that could hurt you in your private money relationship as well. So you bring those two together and you let them handle it. Fidel, I think that answers your question. If it doesn't, let me know. If it does, let me know either way. Say, yeah, that was exactly what I was looking for, or I was really looking for this other thing. I'll be happy to answer it in a subsequent video. So thanks, guys. Appreciate it.